Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your update for Thursday, the 26th of April. Lots of things going on today. Gold, oil, and some other markets as well. You can see basically we are questioning on the DailyXchange today is what markets are on your radar today. We've already had 13 comments on that from members. Join in the commentary. I think you'll enjoy it. It's all about exchanging ideas and looking for markets that are working. So let's go to our portfolio manager. And let's look at the S&P 500, starting with that market. And that's at plus 75. You can see it's actually doing very, very well. It's actually just clipped yesterday in terms of the PSAR. We've got that buy signal there. Our long-term trend is still positive. It never changed during this pullback. And that's the important thing to remember. Intermediate-term traders should still be on the sidelines waiting for a signal to get long via the weekly trade triangle, the intermediate term trade triangle. What you can see also on the PSAR, see how it's just beginning to flatten out and make that turn. I think we're going to be looking for this market to go higher. We're looking for a target zone, as we've said on previous occasions. And I'll just get my illustrator on. We're looking for a target zone on this market, somewhere in the 1550 to 1600 level, and that's by sometime in June. And it's based on our cyclic work, but of course we'll always rely on our trade triangles, which are positive here. We need some help on the weekly, and we may get that as early as next week. So let's close the screen, clear the screen, I should say. Go to our next market, and the next market we're looking at is going to be Dow. Dow looks very, very good. You see it's taken out this previous high right here. The high close there was 13,115 with 13,144. So if we close at these levels, it's a very, very positive sign. Plus, it's a Thursday. Tomorrow is a very key day. If we close well on Friday, we'll have a good chance to challenge these highs, which were coming in around the 13,300 level. So let's see how that plays out. Looking at the NASDAQ is not quite as robust because obviously it's been helped in large part by Apple. But that's something you should definitely take a look at as well. But Apple is down on the negative side today. Most of the enthusiasm, we reported this yesterday, Apple had a 61.8% Fibonacci retracement. We felt that was a concern. Our intermediate, in fact, let's take a look at Apple, and it's easy to do with Market Club. And I'm going to put that on the screen. So APPLE, you can just spell out Apple if you don't know how the symbol is AAPL. And we'll look at that stock right now. So it's down, not a lot, but it's still on the defensive. And here's the situation. We jumped up here. That was a 61.8% Fibonacci retracement from this high to this low. And we are still in a defensive or trading range mode. You're seeing the MACD is beginning to turn around. So let's watch that. But it doesn't seem to be too much enthusiasm to push this market higher. That's what I'm trying to say. So let's go back to our portfolio manager and go to our next stock, which is going to be the silver market, not our next commodity, I should say, the silver market, which is a minus 60. But silver and gold are really beginning to look a little perky, more so in gold than silver. But you see we've just made a little sort of turn up today. Minus 60 is a trading range to the downside. The trend is still longer-term positive in terms of our monthly trade triangles. However, the weekly and daily, they're negative. So no reason to jump in this market right at the moment. Gold, on the other hand, is a little bit different because you can see the pattern here on gold. You have a daily trade triangle. Went green today, meaning you should cover any short-term kind of trade you have in this market at the moment. We are seeing the flattening. We've just turned up in the MACD. We're a little bit overbought here, but it looks like we've talked about this market making go out here. We've talked about this market making this sort of big head and shoulders base, which we've sketched out. We still think it's going to be the plan. And here we are, this move here and here, and then just here. And I think we're just beginning to make that turn up. But the key level, obviously, is going to be this neckline right here. So 1700, big psychological level, which is right here. And then, of course, 1800 right here. That's the big one. And if we get it over 1800, then we're off to the races and going to look at $2,000 or $2,200 an ounce. So that could be sparked up by Europe. We'll decide what happens there. So let's go to our next market. And the next market we're going to be looking at is going to be copper. And copper is actually putting in a very good performance. Let's get this closer in so you get a good idea where we are. So here's the action in copper. You've turned back up in the MACD. You have, let's put our trade triangles in. Our trade triangles never went negative long term, always positive. Only the weekly is negative. That's the intermediate term trend. And the short term trend, which is the daily, has turned positive. Now you could also look at this market and say, okay, we'll measure from the highs here, and we'll drag that down to the lows. So right around the 3.8 level, that should be a 61.8 Fibonacci. We'll see how it holds up around there. But it's the fact that it's come back through this level here, which is a big barrier in my mind, is actually, I think, pretty positive. So let's clear the screen, go to our next market. Yeah, the next market is going to be, of course, crude oil. Crude oil is putting in a good performance in my mind. If we see it close, I'm just going to put this on a close-only chart. But you can see we've got two of the three triangles are positive. Only the intermediate-term trend is not positive yet. You've got the MACD positive. But if we close over this level today, 104.66, and we're currently 104.64 right now, I think that should be viewed as a positive, and we've made this turn to the upside. As many of you know, if you've watched my broadcasts in the past, we've looked for this market to build a substantial area of energy, and no pun intended, but if we just take everything off the screen, you'll see what I'm discussing and talking about. So let's just take the Dungeon trade channels and the parabolic off, and all that's left now is just a very simple chart of the markets, and this is the crude oil. And of course, the picture we've been drawing here for the last several weeks, and one that seems to be working, is this type of picture. And you've just come back, so there's the trend line, the breakout right here. You've come back, tested the trend line. Now we're starting to turn up again. If we get this market going over the 105 area, then I think we've got something going to the upside, and we'll test the 109 and the 110 level. Once through that level, these levels here close over 110, we're looking at the 120 to 125. And that may be the problem with the economy. You know, if it gets to those levels, those prices for gasoline is going to be very, very expensive. But generally speaking, the longer-term trend based on our triangles are still very, very positive, and this is what we have to look at. And this is all you can do in trading, is look at the odds and see where they all are. So there's the monthly trade triangle, still positive from 101.83. It's 104.65 right now. And you look at the daily, it was wrong, 104.10. So they're both in a positive position in terms of profits, and I think that's the key thing to look at. So let's go to our next market. That's going to be the USO. Again, the same pattern. If the USO closes over the level we talked about, it's going to go 3 months. If we close over this level right here, and that's the close there, was 39.63. We're 39.61, so very close to closing over into a new high, which will basically give it that pop to the upside. So let's go to our next market, and that's going to be the Forex. This is a big sign in the Forex market from the 132.5 level. We've got a doji line indicating that there's pressure over the 132 area. I think we've probably gone as far as we can go. If we look just in simple Fibonacci terms, we can just drag this down to the lows, and you can see we just basically hit a retracement level today of 61.8%, and we reversed from there. Also, you've got a negative divergence, meaning what that means, quite simply, a negative divergence means you've got a new high price, in this case, like here, and you have a divergence. The momentum's not going the other way, so that's a divergence. That's called a negative divergence. So let's just clear the screen and go to our next market. And the next market we're looking at is going to be the Reuters Jefferies CRB Index. That looks like it's made a turn. Looks like it's got some support around the 300 level, and it's made a little bit of a turn. We can if we put our parabolic and Adonchian trade channels on here, you'll see that we just hit the PSAR today, and it looks as though we're going to maybe see a little more upside on that. So let's go to our stocks on the move. First one is Citrix. Big move up in Citrix today. It's up over 10%. And look at our trade trailers, long from 76. And you can see that we've nailed this market, and we've done very, very well. You've just seen a turn up in the MACD. We are a little bit overbought, but nonetheless, the market's acting very, very well. So next market looking at is going to be Xilinx, and Xilinx is up dramatically. Again, this is a very, very strong trend. 33.93 was the level to be long this market, and I'll scope it out here. You can see it all the way back here. 33.93, that's on January 18th. And of course, we had the pullback, but long-term traders, we would have just stayed through this. And I'm sure if we measured this, it's probably going to be close to a Fibonacci retracement. So let's just do it for fun and scope it down to the lows right around there. And you can see it just basically hit the Fibonacci retracements. These are very powerful Fibonacci retracements, and I think that's one of the key things with using the MarketClub tools. So let's close this up, or clear the screen, I should say, and go to our next market. I think it's the last one we're going to be looking at. Let's just see. And that's, yeah, Metro PC Communications under tremendous pressure. And look where the signal came a couple of days ago on the 23rd to basically get short this market. So you're down in this stock today 9.2%, but we knew basically 1, 2, 3 days ago that this is in trouble. So that's the beauty of MarketClub and how you can get in and out of the markets. Very, very powerful tool. But remember, you can always go to where the members go, and that's the DailyXchange, and talk about ideas and different things that you're looking at and share those with members, and it becomes a more powerful unit for everyone to make money. So anyway, this is Adam Hewison for MarketClub. I'll be back tomorrow with the Friday update. Big day tomorrow, so let's be close attention to that and see how things play out. Have a great trading day, everyone.